Good day everyone, I'm Ivan, the moderator for this webinar. I welcome everyone to today's webinar, 10 Red Flags That Signal Financial Distress in Business Customers. I want to introduce our presenter for today, Dave Strischek, a frequent speaker, instructor, advisor, and writer on credit risk and commercial banking topics and issues. I would now like to hand over the floor to the speaker. Over to you, Dave.
Thank you, Ivan, and welcome all of you to my red flags of financial distress. These have evolved out of my own experience in banking and lending. But what I'm hoping to do with these red flags is to give you something that will tell you that things are not going well. That's the whole idea of red flags. And quite often, one flag leads to another. And many of them, particularly from a banker's point of view, are often events of default. That is, if you commit this transgression, it gives the lender the right to call the loan. So I also will try to offer some tips on monitoring, nice to know if they're there, and also how to make them less serious or less of a problem. So let's take a look at the 10 red flags, and I will address each of these in this order. So, ailing industry, declining financial condition and operating performance. We bankers certainly watch this closely, but let me start out by saying the challenge here is that as a company gets into difficulties, one of the first things that begins to occur is a decline in the frequency of the financial information provided. So organizational volatility. There is, first the idea is the organization a proprietorship, partnership, or corporation. Professional turmoil. I mentioned the churn in CFOs and the accounting firms, but when you start looking at basic professional services, most companies are going to need a law firm. Asset disposition. Well, when you think about the assets of your customer or your borrower, certainly receivables come to mind. And of course, a key element is what kind of credit losses. One way to increase sales is to ease up on your credit requirements. Then there's changes in ownership. This is we base the credit decision on the people we know or the people we've come to know in that company. Credit deterioration. Well, we bankers and many suppliers are looking at credit scores, declining communication. Smaller banks, this is quite often the advantage they have over larger banks. All right, major casualty loss. We have natural disasters. Again, geology, earthquakes, flood, heavy rain that leads to mudslides. All right, negative media, but essentially negative media coverage is what you find on Google about the company, unfavorable, unethical, or information about the individuals, the CEO or the CFO or the organization itself. What have I done today? I've talked about 10 red flags, ailing industry. Maybe your customer isn't ailing yet, but what if it's in an industry that's in trouble? Declining financial condition and operating performance. Of course, the catch there is you need to have regular reporting of this information. Again, these 10 red flags, some of them are closely related, others not so, but from a career in banking, these are things that I look at or I pay attention to. So also keep in mind that many of them trigger events of default. So if you're a supplier, you want to make sure that they haven't lost their bank of account. All right, I have a sources and reference slide that provides you a little more information on credit deterioration, how you can contact DMV about the PDEX score, some bankruptcy sources, and then, of course, the negative social media sources. So with that, Ivan, I will sign off. Thank you very much.
Thank you, Dave. That concludes the session for today. I want to thank you everyone for participating. You may all disconnect now. Have a great day ahead. Bye.